Yo, it's your boy Eli Wolf, Commerce Crew here with a Nasdaq trade recap on December 15th, 2023. This is a trade setup that I've seen. I want to walk you guys through it. So to start off, I started off with drawing my levels. So notable levels that I seen, I pretty much waited until 9:30, but off the rip I see that we got relative equal highs here. So what I did was I went ahead and drew buy side right there, and I drew sell side right here. Okay, so these are the first two levels that I drew out before 9:30, and I'm gonna walk you guys through it like step by step. So we're on market replay right now, and we're gonna be able to actually see where an entry could be placed, a stop loss, and all that good stuff. So just stick around so you can see how this plays out. So I noticed relative equal highs here were getting pierced, but I also seen that sell side was taken right here. We're trading in the range, essentially, is what I seen. So boom, we got another pierce in the sell side. This is at 925. We're on the 5-minute chart on the Nasdaq. So as soon as we pierce that, we got our 9:30 candle. So that's the opening. As soon as we had that opening, I waited for another candle closure. So boom, I waited for that. And some things that I noticed was that we have a very long wick here, and you know how I feel about wicks. I went ahead and drew my consequent encroachment, half point of the wick. That was about 16,773, about that much. I mean, if we want to be really particular, we can go 16,772.50. This is actually what I had on my chart. So, but when we have those numbers, we definitely could just round it up to 16,773 if you want, but this is what I had, so I'm just gonna keep this transparent and organic. So that's the level that I had. And why did I wait for 9:30? I wanted to see if we were gonna open with a gap. And what I mean by open with a gap is 9:30. This 9:30 candle, this is actually the open of the equity session, and the close was 4 o'clock previous day. So 4 o'clock previous day is this candle right here. It closes 4 o'clock, closes right there, and then 9:30 opens up here. So everything in between here is a gap. So when you hear someone say that we gapped up in the morning, this is what they're talking about. I'm gonna draw it out so you guys can actually see this. So that's the 9:30 that I'm anchored to, the 9:30 open, and we're gonna look for the 4 o'clock close. Should be around right here. Yeah, that's the 4 o'clock close. So this is everything in between here, well, after, is a gap. This is a gap up. So I have electronic trading hours on. If you were in regular trading hours, you would see everything in between here. You probably wouldn't even see all this price action. You would just see a gap up, like an empty space in between, depending on what platform you're using. Like I said, if you have regular trading hours or electronic trading hours. So since I'm in electronic trading hours, I could see all the price action with that gap, but that was still a significant level to me, or area of interest. So I have all these areas of interest. I have sell side being poked or pierced, is being pierced inside of the opening gap, and consequent encroachment of this wick is a sensitive point for me. So I'm looking for longs. At this point, I'm waiting for price to come down into a discount so I can get in. Comes down right here, picks itself back up, and I'm still waiting for an entry. Now right there, see how we come down and we almost touch the relative equal highs. If you're a classic support and resistance trader, you may look at this as resistance turned into support right here, and maybe you got in right there and put your stop loss there and targeted maybe this high or another area. I did not do that because that's not my trading model, and we pretty much keep going up for the rest of the morning. Now, I didn't see this as a bad thing because, one, since I want to get long, we have to take out buy side. That's how I'm looking at it. We took out the relative equal highs here, and we're pretty much just, we're making our way up. We're doing like a 3 drives pattern. I have this inside of the futures trading manual on my website. This is the 3 drives pattern. I learned that from ICT, and that's what seems to be forming. So I'm anticipating price to actually come back down. I have another, so that same wick that we were talking about, I have that wick. I did not draw consequent encroachment on this. I think only because of the fact of how much things I have going on down here. This is really where I want my bounce to happen at, along the lines of these levels. So anything in here, there could be a bounce, but I assume that if there was a bounce, it would be short-lived and maybe bounce into a short to come down. So it looks like we made that 3 drives pattern and we're starting to come down. So this is in the afternoon now. So you see how we have the 1, 2, 3, failed to make a new high. We don't need to because we're coming down. This could be your trading model where you bought inside of this gap, stop loss up here, and what are you targeting? You could target consequent encroachment of this wick, the actual low of this candle, which happens to be right on top of relative equal highs that got taken out, or really the level that I drew earlier. I did not take this trade because it's in the afternoon. I don't trade the afternoon session. I just wait and watch what it does. I just read the tape, and so far I'd like to think that I was reading the tape accurately as far as price going up to come down. Continues to go down. Now, I'm not getting scared of this because, like I said, if we were to bounce at this wick, which we kind of did here when we made that one, I was anticipating it to continue moving down anyway, and if it did bounce, to just go up a little bit. Now, if you weren't familiar with that 3 drives pattern, you would have thought that price would have came up into this gap, but this is the move that already set itself up to come down. But we're outside of my trading hours, so I'm not able to actually execute on this. I like to wait until the buy or sell program activates around 1:30. So 115, 120, 25, 30. Okay, so at 30, so look at that. We're actually maybe like a tick or two away from that gap that I just mentioned. So I'm gonna show you guys the two different entries that you could have took if this was your model that you've created. Okay, so using the material inside of my futures trading guide, these are two solid entries that you could have took. Again, that's if this was your trading model. It's not mine, but being able to read the tape still helps you understand what's going on with price, so that way when your setup is forming, you could have more confidence with it. So like I said in the beginning, I'm waiting for price to come down here. For it to come down here, it has to move up and come back down. So it moved up, created these sell patterns. Boom, that could have been the entry right there. Boom, that could have been an entry right there. These two are to the downside. And look at that. Price came down and it's 140 at this point, and it's almost at the level that I drew earlier. I'm gonna go to a smaller time frame. Do the 1 minute. Yeah, I actually I'll explain the time frames to you in a second. So as we're approaching my level, I go down to a smaller time frame because I like to fine tune my entries. So right here, we tag my level, to the tick right there. Boom. This could have been an entry for you for a scalp. If you were to put your stop down there, and what would you target? Maybe you would target this little gap there. I don't play those types of moves. Like I'm playing something completely different. So what I didn't like about this was that it was just a wick. This isn't confirmation to me when I see something like that. I need a little bit more confluence. But like I said, if that's your type of move, you would have made, let's see, this is 81. Believe that was, yeah, that's more than 10 handles right there, because this closes at around 16,781. And we're at 94, so 2, 3, 4. So yeah, that's about 13 handle move right there. That's pretty solid. And just to give you a visual of what that would look like, say you bought one contract there. That would have got you $245. Again, with your stop down here, and you would target in this gap. Now, let me get off of that. Okay, so back to what I was talking about. We went up there, and I'm calling these things out. And again, you might be wondering, well, if you're able to call these things out, why are you not trading them? Again, it depends on your trading model. It's not in my trading model to take these at this time. So using smart money concepts, we operate off of time and price. So time of the day is just as important as what price is doing. And at these times of the day, price is doing what we essentially wanted it to do. That's a good thing. So price continues to do its thing. We come back down to retest my 16,772 level. Now we're at about the halfway point of that morning opening gap, right? We're at about halfway. So that's another area that I'm looking at. And we're on the 1 minute chart, by the way. So I continue to watch price. I'm just being patient, waiting until I see something I like. As soon as this candle forms right here, I was watching the 1 minute chart. I seen this candle form, and I like this candle. What do I like about this candle? It's the candle that came after it. And what do I like about that one? The one that came after it. This is one of my setups right here. This is something I like to see. So the first thing I thought was, okay, I need to fine tune this and go down to a smaller time frame. I'm on the 1 minute right now. Now we go to the 30-second chart. Now to somebody else, if we zoom out, this is a 30-second chart. This looks like a bunch of chop to somebody else, but with the market analysis that I just gave you guys all the way up to this point, you can see that pretty much everything that happened here made sense to us. So, or it made sense to me and people who trade smart money concepts. So what did I see here? I see my fair value gaps. I have one right here. One, two, and three. So these are the three fair value gaps that I've seen on the 30-second chart. Everything is fractal. It doesn't matter what time frame you're on, you're gonna see these things the more you study the content. So I waited for price, and what I want to show you guys is that I wanted price to go into the second fair value gap and to reach at least half of it. What it does is it actually comes all the way down here and closes at the lower one. This just means I have a better entry. So went ahead and bought here. And the cool thing with the replay feature, we're able to put a stop loss on now. So you could put your stop loss at this swing low, this swing low, and depending how much money you're risking, you really could choose whichever, whatever fits your risk tolerance. So if you're risking like $500 on this trade, you could put it on that swing low, and still, if you get stopped out, you're still within like half of your daily loss limit that you set for yourself. So yeah, if it stopped you out here, you'd be able to get back in and take another however many handles this move is. But keeping things transparent, I had my stop about here. Yeah, so risking $100. And what do I want to target? We want to target those relative equal highs again, or at least that level. That level has already been taken out, but as you can see, we have some more highs right here. If I was to put Fibonacci retracement on, could do that. All right, so 16,829. This is what I'm targeting. 16,829. Okay, and just so you guys can see it a little better, I'm gonna make this green. Okay. So we come down a little bit, we wick down a little bit, just went back to that same 16,772 level, but we didn't stop. We didn't stop out. And price starts to move from there. Now remember I told you guys that I wanted price to come to at least half of the second fair value gap. Something cool I want to show you is that we're still on the 30-second chart right now. So if this was giving you too much anxiety being on this 30-second chart, if you went back to the 1 minute, which is not, so much difference, right? But See this 1 minute candle, how it closes right on the second fair value gap? We bought on the wick of this candle because that was a 30-second chart. Every 30 seconds there's a candle. So there's about 2 30-second candles inside of each minute candle. So we bought the first candle. Let me go back to it. See the first candle there? Wait. Yeah, so first candle's here, second candle's there, and so on and so on. We bought here, but on the 1 minute chart, it looks like this candle just went down there really fast and came back here, which it did. Now let's zoom out and watch how this plays out. I'm gonna go back to the, I'll keep it on the 1 minute, I guess. So like I said, if you wanted to, look for a place for partials, this could have been one. These highs here, we already took it on that candle. I said the relative equal highs. There's a second one, and then a third spot you could target is my level up here, the 829s, and then if it goes higher, you can target that fair value gap up here, right? So how many is that? 1, 2, 3, 4. All right, so I got an idea. Here's what we're gonna do. On our entry, we're gonna use 4 contracts just to show you, because I know I'm talking about partials, but I want you to see what that looks like. So again, let's say this was our first buy. We bought 3, 4. Bought 4 contracts right there. Our first selling point is gonna be right here at these highs. It's way too fast. So we're not there yet. All right, so right here, with 4 contracts, we're already up $2,520. But we're gonna take one off, right? Boom. Now we got 3 contracts in there. We just pocketed $630. So let's continue until we get to the relative equal highs. Boom. We didn't close above it though. There we go. Close above. Yep, we closed above it. Gonna sell another one. Now we got 2 contracts left. Where's our other spots? Oh, the other spots, my target right there. And the cool part about this is that you could sell anywhere up here. Even if you got scared out of your position, you're still in profits. So that's pretty cool. All right, so we're getting close. Well, we're at it. It pretty much tagged it just now. It's gonna give you several chances to get out. I see two instances, one right there, one right there, where you could have gotten out if you didn't want to see that that retracement. Third time right there. So we're pushing into the end of the day right now, if you pay attention to the time. So now we closed above it, and this is at 324. I'm gonna sell another one. Okay, so now we're on our last contract. Where do you think it's gonna go? Well, we have where we think it's gonna go. Have about half an hour left for it to get up there. If it doesn't, you can easily put your stop under the relative equal highs level that we drew out earlier. But let's see what happens. Okay, so let's just actually put a stop loss. Yeah, so this is what I was saying. If you were scared and you didn't want, to get knocked out completely, you can put your stop up there. Yeah, let's continue. So we're getting into the last like 15 minutes of the trading day. Yeah, look at what time it is. It's 3:47. We're on the 30-second chart. So every 30 seconds, these candles are forming. And look at that. We tagged it. So at 3:50 on the dot, we tag that fair value gap up here. Let me show you guys what it looks like on the 1-minute chart. 2-minute chart. That's what that looks like. And let's actually pull this out too. Okay, so this is the end of the trading day. It's about 4 o'clock. We're back inside of that original fair value gap that we were talking about. I just wanted to see if it was gonna fill in that one. It didn't. But yeah, let's close that last position out. So we should be, yeah, so we're all out of contracts now. Wait, what happened? What happened to the entries? Okay. Yeah, I don't know what happened to the entries, but anyway, we made $3,690 using those 4 contracts. And we didn't even have to hold those 4 contracts all the way to this price level. This may look like chop to some of you guys, so let me go to like a higher time frame. My higher time frames are still like super small time frames than you guys are used to. Okay, maybe, yeah, I just want you guys to see what I'm talking about. So the highest I'm gonna go right now is this 2-minute chart. It's just still like funky down here, but yeah. Nah, let me go back to the 1 minute. You'll be all right. Okay, so we bought our 4 contracts down here. We had our stop loss really tight down there, and look at all of this room that price moved up. Is really, you really couldn't have lost on that entry. That was essentially like that's what I like to call the smart money reversal, or my trading models entry. This is why I didn't need to take this short or this short. I technically missed these because these are outside of my trading hours. But if these hours, if you're able to see this price action clearly, or you were looking for shorts that day, these are where you would have entered. If you would have entered right here, you would have had, that would have been the best entry right there, because it went lower for the rest of the afternoon until I stepped in the market and played it to the upside, basically to the same place that you would have got in at, right? So this just shows you how the different market participants can make money, you know, when the market's coming up or coming down. There's always a buyer who wants to buy what someone else is selling. If you enjoy videos like this, give me a thumbs up and let me know what you think in the comments. Please remember to hit the subscribe button. Thank you for watching. We turn points to commas.